The Turkish central bank left rates on hold at 10% at its latest meeting. Now, this decision was expected. However, there is plenty of political pressure to cut interest rates since January's aggressive rate hike. I am joined by Sevin Ekinci in Istanbul. So Sevin, when do you think they will actually cut rates?
Well, actually, as you said, this was within expectations. The marginal funding rate, which is the upper band of the interest rate corridor, is at 12%. Policy rate is at 10%. We cannot call this a policy rate anymore. This is 1 week repo rate. And previously they were calling 1 week repo rate the policy rate. But I agree that they are funding more from the 1 week repo auctions. So we can consider it as 10%. On the other side, any easing move will not come before June because they have to see the April and May inflation figures. And these are very important because we have a very unfavorable base effect on the inflation side on April and on May. So, and after June, the inflation rate will start to decline because of the favorable base effect. So any kind of easing move will not come before June, Darren. It also depends on the developed markets' monetary policies. It can take longer. It also depends on the international politics because, there are high political tension in Turkey in December and January, and we have the presidential elections in August right now. So there might happen some social political tension in Turkey again. These are important. On the other side, I want to mention about this political pressure issue a little bit. Although it seems like there's a big political pressure to the Central Bank of Turkey on raising interest rates, I know that this is only Erdogan's idea. He wants the country's interest rate to be lower and lower, and this is just his personal view. And it is good that we did not see any change in the governor of the Central Bank of Turkey. He's still keeping his job, and they made a front-loaded interest rate hike, as you know, at January interim meeting. So things are quite stable right now, and as you have seen, maybe this move has been applauded by the markets. They appreciate it because the Turkish lira is strengthened to 2.13 right now against dollar, and I think it was a very, very expected and very positive decision by the Central Bank of Turkey.
And what sort of trends are we seeing with the lira this week?
In the beginning of this week, Turkish lira was relatively stronger. Some of the analysts were not expecting this negative mood in the markets because yesterday there was a public holiday in Turkey. It was an official holiday. So any type of negative sentiment in the markets, in the international markets, did not affect much Turkey. However, even it was a public holiday, we saw that the Turkish lira weakened to 2.15 against dollar. But after the Central Bank of Turkey decision today, they gathered a tightening move. The Turkish lira strengthened to 2.13 against dollar right now. And it depends, and for the rest of the week, it depends on the data that will come from the United States and European Union. At 3:30 local time, Istanbul time today, there will be a release of the U.S. durable goods and on the other side, U.S. initial jobless claims. These are very important. If any positive figure comes from this side, we can see some weakening in the Turkish lira against dollar because good figures on the macroeconomic structure from the United States, brings more tapering, and this increases the expectations for tapering, and this increases the value of the U.S. dollar. So I think if U.S. macroeconomic data, if it comes very positive, we can see some weakening movement in Turkish lira again.
How big of a threat to government spending is Turkey's pledge to guarantee the debt of contractors on public spending projects, and how could this affect the bond market?
Well, the bond market will for sure be affected by it, but the threat is not very big. It's not. Turkey is not in the years of 2000. There was a very, very big financial crisis in 2001 in 1994, and the banking structure, the public policy, fiscal policy is much more stronger right now. So there is no big threat, but maybe we can see some increase in the yields in the bond markets, but this will not be a big threat to the public structure of the country. After this rate decision, the benchmark interest rate rose from 9.7% to 10.07%, like 30 to 35 basis point increase in the bond market. So this is also good for the structure of it's in a very good structure, but we have to see the figures that will come from United States today.
Sevin, as always, it was great speaking to you. Well, viewers, do stay tuned as we have plenty more heading your way. Goodbye for now.